Hello everyone. In today's video, I will try to explain the concept of accounting equation. This topic is from Unit 2. Accounting equation is based on the mathematical concept. An equation in mathematics has two sides, that is, the left hand side and right hand side, where the values of left hand side equals the values of right hand side. So based on this concept, even accounting equation is framed. So the first thing that we need to remember is that the assets of a business are always equal to the capital and liabilities. It can be shown as assets is equal to liabilities plus capital. Secondly, we need to understand that every business transactions will result in the change in either of assets, liabilities, or capital of the business in such a way that if one asset increases, then either other assets will decrease or liabilities will increase with equal amount, or capital will increase, and even after the change, the assets will be again equal to the total of liabilities and capital. Now, to make you understand this better, let me give you some examples. Let us take an example where the business has purchased machinery for cash and the value of the machinery which was purchased is rupees 1 lakh. In this transactions, there will be two accounts which will get affected. That is the machinery account and the cash account. The machinery account is an asset. On the other hand, the cash account also is an asset. Now let us see the effect. If we look at this effect, we can see that the machinery which was purchased, since machinery was purchased, the machinery will increase in the business. It is an asset and it will increase in the business because it will come into the business. So in this case, the assets will increase by 1 lakh rupees in the form of machinery. Now let us see the effect of the other account. Now, cash is an asset also, but in this case, this asset will decrease because the business had to pay the cash for purchasing the machinery. So, cash will decrease from the business. So, on the asset side, we will see a decrease of 1 lakh rupees in the form of cash. So, the total effect on the equation, if we have to see, then we find that if we look at the asset side, one asset decreases and the other asset increases. So the net effect of assets will be 0. Now if we go to the liability side where the liabilities and capital is represented, here we see that the liabilities are not affected in this transaction, so it remains 0, and capital also is not affected, so this also remains 0. So when we add the liabilities and the capital on the right hand side, we find that the total liabilities comes to 0. Now our conclusion is that after this transaction also, the equation which says that assets are equal to liabilities plus capital, it remains unchanged. That means it has given us the result that the assets are always equal to the liabilities. That means the assets are equal to liabilities plus capital. So it satisfies the equation that assets is equal to liabilities plus capital. So what the main concept here is that in a business, whenever there is a transaction which takes place, that transaction will result in some changes in the assets, liabilities, or capital in such a way that the result will always be equal to the left hand side, and the values of the left hand side will always be equal to the right hand side. That means the assets will be equal to the liabilities plus capital. Let me show you another example where an asset and a liability will increase. Now let us take an example where the organization has taken a loan from the bank. It has taken a loan from the bank rupees 1 lakh. Here there will be two accounts which will get affected. One is the loan account and the bank account. Now, loan is a liability for the business. On the other hand, the bank account where the business is receiving the cash, the bank account of the organization where the business is receiving the cash from the bank, it is an asset for the organization. Now, the effect of this is that the liability, that is the loan, which is a liability, it will increase in the business as the business has to pay this liability after a certain period of time. So this is a liability at present, so it will increase on the liability side as bank loan. So liabilities will increase by 1 lakh rupees as bank loan. Let us see the other effect of the other account. The business is receiving cash because it received a loan from the bank. So the cash in the bank of the organization will increase. It is an asset which is going to increase. So on the asset side, the bank account of the organization will increase. So the net effect, if we see, we find that one of the asset, that is the bank, increases, and the other side we see that the liability also increases by 1 lakh rupees. So the net effect, if we see, the total of the assets shows us 1 lakh rupees, and the total of the liabilities plus capital, that is the total liabilities, shows us 1 lakh rupees. So even after this transaction also, we do find that the assets are equal to the liabilities plus capital. So in every transaction, the effect are such that the assets are always equal to the liabilities plus capital. Let me show you another example where the capital increases and an asset also increases. Now let us just take an example where the proprietor introduces cash in the business. So here there will be two accounts which will get affected, that is the cash account and the capital account. So the cash account here is an asset for the business, and the capital is represented with the capital account only. Now the capital also will increase in the business. Let us see the effect here. Now the owner brings in capital. That means the owner is bringing cash as capital. So the capital will increase in the business. The capital is a representation of the owner's money. So the capital in the business increases by 2 lakh rupees. So towards the liability side, the capital will increase by 2 lakh rupees. Now let us see the other effect. We find that the organization is receiving cash from the owner. So cash is an asset, so the assets will increase. So towards the asset side, we see an increase of 2 lakh rupees in the form of cash. So the total effect of this transaction, if we see on the accounting equation, we find that the total of assets is 2 lakh rupees and the total of liabilities also is 2 lakh rupees, because we don't have any liabilities account affected in this transaction. We had capital of 2 lakh rupees. So the total of liabilities and capital gives us 2 lakh rupees. So the effect is that the assets are equal to the liabilities. That means the assets are equal to the liabilities plus capital. So after every transaction, the effect will be such that the assets will always be equal to liabilities plus capital. It will always satisfy this equation, that the assets will always be equal to liabilities plus capital. So the whole accounting equation is based on this equation. So we can say accounting equation refers that every business transactions will result in the change in either of asset, liabilities or capital of the business in such a way that if one asset increases, then either other asset will decrease, or liabilities will increase with equal amount, or capital will increase, and even after the change, the assets will be again equal to the total of liabilities and capital. I hope after this video you might have understood the concept of accounting equation. Thank you.